It is the start of a brand new week, the monthly expiry one at that, and also the monsoons have set shore in the country. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Centre. I'm Hormas Patakia. With me is Vamakshi Doria. Vamakshi, good morning. It has been an action-packed weekend, and the week promises to be no less.
Well, absolutely, Hormas. We're actually starting off the week on a very good note, given the kind of developments that took place over the weekend. So let's see what this week holds. So let's get started with the top headlines then. US futures surge after Donald Trump delays EU tariffs to July 9. This comes after a fall in Friday's session, with the Dow Jones ending over 0.5% lower and the Nasdaq falling 1%.
Asia-Pacific markets also rise as investor sentiment picks up on Donald Trump's EU tariff deadline extension. The Nikkei and the Kospi have opened 0.5% higher, while the GIFT Nifty is also indicating a start in the green for our own markets.
US President Trump condemns Russian president's decision to unleash one of the largest offensives in Russia's war against Ukraine, and he said he was considering imposing more sanctions on Russia in response.
The Reserve Bank of India has declared a record dividend of 2.69 lakh crore rupees for FY25. This is 27% above last year's dividend, and the RBI has also hiked the contingency risk buffer from the previous range of 5.5% to 6.5% to 4.5% to 7.5% of RBI's balance sheet.
Monsoon arrives 8 days early, marking the earliest arrival in 6 years. The IMD has forecasted light to moderate rainfall over Mumbai and suburban areas during the next 3 to 4 hours.
As you just heard, the big news of the morning was the fact that Donald Trump has delayed the tariff threat that he had announced last Friday on the European Union. He promised a 50% tariff from the 1st of June. He's now delayed that to the 9th of July. But the reaction on the markets, other than the Dow futures, of course, the Dow futures are up almost 350 points. Of course, the US markets are shut for trading today on account of the Memorial Day holiday. Not a significant reaction on the Asian markets as of now, because it's a mixed picture that's coming up for us on the screen from the Asian markets. The Japanese markets, of course, are trading with gains. The Nikkei is up around 0.8%. The Kospi is trading with gains of around 1%, so 0.9% higher on the Kospi. The Hang Seng, though, down 0.5%. The Taiwanese index also trading below the flat line. So it's a mixed picture that is emerging from the Asian markets. But pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Fairly decent. A 60-point uptick is what you are witnessing on the implied open as of now for the GIFT Nifty. So, Vamakshi, well, you ended on a high on Friday, and it looks like we are looking to build on to that.
Well, absolutely, Hormas. And like you were just mentioning, the big news today is, what came through from Donald Trump. The US president has agreed to delay the 50% tariffs on the European Union. Take a listen.
She asked for an extension on the June 1st date, and she said she wants to get down to serious negotiation, because I told you specifically, I told anybody that would listen, they have to do that. And we had a very nice call, and I agreed to move it. I believe July 9th would be the date. That was the date she requested. Could we move it from June 1st to July 9th? And I agreed to do that. And that she said we will rapidly get together and see if we can work something out.
And all of this just happened a few minutes earlier when Donald Trump reported about this on his Truth Social account. But before that, last Friday, Wall Street session was a negative one. And this is, of course, after Donald Trump had announced that tariff threat on the European Union. Although at one point, the Dow futures were down 600 points. But the index ended around 250 points lower. The S&P 500 also lost around 0.7%. The Nasdaq fell 1% as well. Of course, that was led by the losses seen in shares of Apple. And for a week, all of the benchmark indices lost 2% on a weekly basis. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes Friday after President Trump threatened new tariffs against Apple and the European Union. The Dow falling 256 points. The S&P 500 slipped 39 points, while the tech-heavy Nasdaq was down 189 points. President Trump today threatened to slap a new 25% tariff on Apple iPhones if the company failed to shift its production of its flagship product to the U.S. from overseas. Later in the day, the president said those tariffs would also be aimed at other device makers, including Samsung, by the end of June. President's threats come after Apple said that it would move its production of iPhones to India in order to avoid the tariffs on goods produced in China. Apple and Samsung did not comment. Meantime, President Trump signed a series of executive orders aimed at boosting nuclear energy in the U.S. Trump's orders include overhauling the Nuclear Regulatory Commission, an independent agency that regulates the nation's fleet of nuclear reactors, which a senior administration official said could include staff reductions. Under the new rules, the commission will be forced to decide on nuclear licenses within 18 months. Another order also opens the way for the Department of Energy and Defense to build reactors on federal land. And a reminder, U.S. markets will be closed on Monday for the Memorial Day holiday. That's what's happening here stateside. Back over to you in Mumbai.
Well, the flip-flop between tariff threats and delays have resulted in macroeconomic uncertainties for the U.S. economy. On that note, let's listen in to Neel Kashkari, president of Minneapolis Federal Reserve. He has shared his views on the same. Let's listen in.
Very high period of uncertainty. You know, a couple of months ago, the shift of sentiment in the U.S. in January, I think there was exuberance amongst most businesses that I talked to. By March, April, that had dramatically changed. It reminded me of March of 2020 when COVID hit, that dramatic change in sentiment and of the outlook. And so that uncertainty is still with us. There's still, I think, a long time to go for these trade negotiations to provide the ultimate clarity. I think in the U.S., there are big policy changes that are being undertaken right now. We've talked a lot about tariffs. Immigration policy is enormously important to the U.S. economy and the major countries around the world. That's another source of uncertainty. And then, of course, there are fiscal changes that are being deliberated in Congress right now. All of this is adding to just some uncertainty about what is the ultimate destination, what's the new normal for the U.S. economy. And I think businesses and households are trying to navigate that.
Well, it has been a wild week for U.S. Treasury yields as well. Recent concerns about the U.S. deficit pushed Treasury yields higher and pressured stocks. And on Friday, Treasury yields retreated from highs as Trump ramped up his trade war. Listen in to Subhadra Rajappa of Societe Generale give her views on bonds and yields.
We're definitely at levels that we should be concerned about, 5% in 30 years. And if for some reason, if you start seeing a continued sell-off in the 10-year towards that 5% level as well, that I think is a bit of a concern. But this is not just a U.S. phenomenon. You're seeing global bond yields rise. You're seeing this unraveling of correlations between all the different assets. I mean, typically when equities sell off, investors flock to the safety of bonds and the dollar. That's not happening. So you're seeing this kind of very, difficult picture, if you will, for bonds globally.
That's all we have on the global market action, but how will all of these overnight cues impact our own markets? Our research team is now joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. First up, Vinny joins in to get all the market cues that we need to watch out for today. Vinny, good morning. Looks like we are building on to Friday's gains is what the GIFT Nifty is indicating, but what are the cues that you are picking up?
Absolutely hoping for a build up in terms of Friday's cues that we have. Now, obviously last week, though the markets closed at the negative front, we had Sensex and the Nifty both were down 1% each overall for the week. Now on Friday specifically, obviously we did see a bit of a recovery coming in and a bounce back coming in. Nifty up 243 points, Nifty Bank up 456 points, almost 1% in terms of gains for both these, but the Nifty as well as the Nifty Bank. Now in terms of FIIs, they have seen a bit of a buying coming in. 1,795 crores is what FIIs bought. DIs also continue to buy. 300 crores buying coming in from the DII front. Important factors that we're keeping an eye out on, obviously RBI dividend that was announced on Friday as well. So that is what we're watching out for. 2.69 lakh crores is what they have announced as dividend. It's in the range of what we were expecting. Earnings season, that's going to be continuing, last leg of earnings season, so maybe some bit of a move on that front. Monthly expiry this week, so maybe that's important to watch out for, given that we have economic data, the GDP data in India that will be coming out on 30th of May. So that is something to keep an eye out on. And overall, Trump commentaries, a lot of commentary that have come in from Trump over the weekend. So in terms of tariff threats, sanctions, then he's spoken about, delaying the imposition of that 50% tariff on EU as well till 9th of July. So these are key commentaries that we are keeping an eye out on. Still a lot of uncertainty in terms of commentary coming in on tariff front. But as of now, what the Nifty implied open is indicating, a bit of a mild positive start is what we could watch out for.
Indeed, 60-point uptick is what the implied open is suggesting. Vinny, thanks a lot for that. Of course, there are plenty of stocks that you need to keep an eye out for because there were results that were reported over the weekend, a lot of other news flow as well. Vamakshi, what are you picking up here?
Well, absolutely, Vamesh. Let me first start off with JSW Steel. The company reported largely inline set of numbers. Standalone EBITDA per ton came in at 8,783 rupees. This is largely in line with what the poll was suggesting. The overseas operations losses also were declined, led by USA. The net debt reduced on cash generation as well as release of working capital. Apart from that, keep an eye out on NTPC as well. Overall numbers missed consensus estimates. Revenue saw an uptick of 4.6%. The margins have declined marginally to 29.6%. But the net profit has seen an uptick of 23.5%, and this is largely coming in from higher contribution from JVs as well as some of its subsidiaries. GE Vernova, on the other hand, reported a good set of numbers, especially on the operational front. EBITDA margin came in at 21.9%, the highest seen among some of the high voltage transformer peers. Order inflow was very strong, an uptick of almost 125% on a year-on-year basis, and the management says that 1 to 2 HVDC projects will be ordered out in FY26. Balkrishna Industries reported flat volumes at 82,000 tons. Margins have declined to 24.8%. The net profit is down almost 26%, mainly on account of forex losses. Glenmark Pharma revenue came in below estimates. The margins have improved on a year-on-year basis, but is much below what the poll was expecting. India's performance was flat, while North America saw a dip. Ashoka Buildcon reported an uptick of almost 12% in its revenue. Margins have improved substantially to 28.9%, and the net profit saw an uptick of almost 73.2%. So those are some of the earnings that you should watch out for. But Mangalam is now joining in with cues from the F&O space. Good morning, Mangalam.
Good morning. So, if you look at Friday, there was a bit of a bounce back that we saw on the indices after the big cash that we saw on Thursday. And that is likely to continue. That's what the GIFT Nifty is indicating. But the question is, what exactly do we do from here since we've started in the expiry week? Two things we'll be watching out for. One would be the flows from the FIs in cash market, and the second would be the flows that we see in index futures. So in the cash market, their purchase resumed. 1,800 crores is what they bought on Friday's trading session, with DIS by pumping in another 300 crores. So a net inflow of close to 2,100 crores. In index futures too, there was a mild purchase that we saw after big selling in the previous two trading sessions. So 150 crores is what the FIs bought. They added about 3,700 longs and 2,500 shorts, though a large part of those purchases were towards the Nifty bank. So that's something we'll watch out for. Over the previous trading session, there hasn't been much of a change in their long positioning or their net contracts. Long positioning stands at about 33%. The other thing we'll be watching out for is the put-call ratio. The put-call ratio has moved back above 1, closer to 1.1. Remember, it's between 1.2 and 1.3 where the market gets into slightly overheated zones. So for this expiry week, what is it that the option writers are positioning themselves for? 24,900 call. A fair amount of writing out there for a premium of nearly 200 rupees. At the lower level is the 24,800 put, which has some premium added as well, with about 170 rupees on offer. So what is it that the option writers are expecting on the Nifty? Support between 24,600 and 24,650. On the way up, congestion between 25,000 and 25,050. And that brings us to our first congestion when we open today itself. For the Nifty bank, support seen at 55,000, which also is the 20-day moving average. Resistance at 56,000, the previous all-time high. In terms of stocks, watch out for Chambal Fertilizers and Hindustan Copper. Both of them have entered F&O bands.
Indeed, 6 stocks in the F&O band today. Mangalam, thanks a lot for that. Take a short break here on Power Breakfast. Up next, we get you updates on the Reserve Bank of India's dividend announcement for the government. Stay tuned. Back on the other side.
Well, welcome back. You're watching Power Breakfast on CNBC TV 18. In a major fiscal boost to the centre, the Reserve Bank of India approved a record dividend payout of 2.69 lakh crore rupees to the government for financial year 24-25, which is a 27.5% increase from the 2.1 lakh crore rupees transferred in FY24. Ritu is joining us with all the details. Ritu?
Well, record high surplus transfer from the Reserve Bank of India to the central government, coming in at 2.69 lakh crores, which is an increase of more than 27% from last year's dividend transfer of 2.1 lakh crores. Now, this number, although large, is tad below what the market was expecting at 3 lakh crores plus, and that is because the RBI board has also adopted a revised economic capital framework, under which the contingency risk buffer was hiked to 7.5% at the upper end. Now, without this large buffer, the surplus transfer could have been even higher and perhaps closer to market expectations. Now, the contingency risk buffer is nothing but the buffer that is maintained by RBI to cover any unexpected and unforeseen financial risks. And previously, it was at 5.5 to 6.5% of RBI's balance sheet, and that has now been widened to 4.5 to 7.5% under the revised framework. Now, RBI says this revised framework provides some flexibility to be able to maintain risk buffers, keeping in mind the prevailing macroeconomic and other factors, while also ensuring the needed intertemporal smoothing of transfer, which means avoiding any large fluctuations year on year. Now, while we'll get to know the fine print of what really contributed to this large surplus when we get the RBI annual report in the coming weeks, but safe to say the big contributor has been the gains from RBI's sale of dollars, which is probably the highest since the global financial crisis at $400 billion nearly for FY25 compared to just $153 billion in the year before, and RBI has made a profit on every dollar that it sold. Other key factors like interest income on rupee and foreign securities would have also lent some support. Now, a higher dividend payout is good news. It is going to augment the government's non-tax revenues, and it is also likely to improve liquidity conditions in the system as well as potentially ease the short-term interest rates.
Ritu, thanks a lot for that. The big dividend announcement coming in from the RBI on Friday evening with regards to the dividend for the government. Take a short break. On the other side, we get you cues from the commodity space. Stay tuned. We'll be right back. Welcome back. Well, it is pouring outside here in Mumbai, and that's because the southwest monsoon has already covered Goa and has already reached parts of Maharashtra and the South Konkan region. Now, the usual date for the monsoon to reach Maharashtra is the 5th of June, but this year it has arrived 10 days early. The IMD has stated that conditions are favorable for further advancing of the southwest monsoon into some more parts of Central Arabian Sea, some more parts of Maharashtra, including Mumbai, during the next 3 days. Parts of Karnataka, including Bengaluru, Andhra Pradesh and the remaining parts of Tamil Nadu are also expected to witness the monsoon over the next 3 days. And if the monsoon does reach Mumbai by the 28th of May, it will set a new record. Now, according to the IMD, the earliest recorded arrival of the monsoon in Mumbai was the 29th of May, which had occurred in 1956, 1962 and 1971. So, well, Vamakshi, it does look like the monsoons have already arrived considering the way it's pouring outside. But, well, we do hope that this is a new record that the monsoon is about to set.
Well, absolutely, Hormaz. You know, we're really feeling the Monday morning blues this time around. But moving on then, we now have Manisha Gupta joining in with all the updates from the commodity space. Good morning, Manisha.
Morning, Vamakshi. Thank you for that. Well, absolutely. It's record when it comes to monsoons in India this time. And we did create some heat wave records as well. Remember earlier part of this year? So, well, the monsoons are quite a welcome thing there. But when it comes to the commodities, we are looking at some bit of a risk on coming in. Let me remind you that the U.S. markets are shut. It's a long weekend there. It's Memorial holiday. So you could be looking at volumes slightly suffering because of that. But with Trump announcing delay of 50% tariffs on European Union from 1st of June to 9th of July now, we've seen crude oil prices gain up for a second straight day. Even the base metal prices are trading in the positive. You have copper prices, aluminum, all of that in the positive in Asia right now. The dollar index has declined below 99. The markets also are reacting to China's stimulus measures. So some positives that you can see in case of the commodities there. Not just crude or metals, it is gold prices which gained up 2% on Friday, up 5% in the previous week, and are trading in the positive at this point in time. Well, there are various uncertainties, tariffs on Apple, statements on Harvard, and then concerns on the U.S. government debt levels. Add to that, the Chinese gold imports surged to an 11-month high in the month of April. So very strong buying when it comes to gold and silver as well. So all in all, strong start for many of these commodities in Asia.
As they say, records are meant to be broken, so monsoons are set to break one as well. Manisha, thanks a lot for that. And of course, it is a strong start to a lot of these commodities at the start of this week in what is a truncated week for Wall Street. But in some international updates, then Russia launched its biggest ever aerial attack on Ukraine's capital city, Kyiv, just hours before the last prisoner swap between the warring countries took place. Now, according to the Ukrainian Air Force, Russia launched a barrage of over 370 drones and missiles across the country, killing 12 and injuring a dozen more. President Vladimir Zelensky has called for action from the US and said that the silence of the US and other countries is only encouraging the Russian President Vladimir Putin. He also called for sanctions on Russia after the aerial strike. Now, reacting to Russia's latest aerial attack on Ukraine, here's what US President Donald Trump had to say.
I'm not happy with what Putin's doing. He's killing a lot of people, and I don't know what the hell happened to Putin. I've known him a long time, always gotten along with him. But he's sending rockets into cities and killing people, and I don't like it at all, okay? We're in the middle of talking, and he's shooting rockets into Kiev and other cities. I don't like it at all.
Well, that's all we have on this edition of Power Breakfast. But don't go anywhere because Bazaar Morning Call comes up next.